Hello my friends, this is the FX Hunter, and in this video I want to show you something pretty interesting what I was looking for the quite while for this interesting thing. It's about the market manipulations. As we all know that the banks are only one who can move the markets. You know from maybe from my videos that I'm watching their positions which they have two reports. This is the CFTC reports. And of course I'm looking what they're doing, how they're positioning themselves, and etc. But the other thing is that this is only for the majors and for the pairs which are traded on the spot. So I can basically let's say like compare the pairs, and I can build the cross pairs as well together. But this is just the one side. We all know that there is as well the other side. Let's call it like a dump money. It's the retail traders, and the smart money is the banks. This is like the official names for it, or anyway. So the thing is that always this dump money, they always lose. So if you want to go with the banks, and you basically have to know what they're gonna do, and the easiest way to know it is you never can know what they're gonna do, but if you know what the dump money or the retail traders are basically doing and where they have their positions, you can basically go against them, because we know that they mostly, like 90% time, they lose. And the thing is, it's because of they are not stupid. The people, there is a lot of clever traders, but the thing is that the conditions in the brokers, the spreads, the swaps, you know, and all of these, and in the last, if you have even the best mindset, the market manipulations and all of these, what I believe is that the market is moved by supply and demand, which is, it's maybe right, but the thing is that I think that the market is mostly manipulated by the banks, because they know the positions, because every broker has to have a liquidity provider. Then who is liquidity provider? Liquidity provider is the banks. And do you think the banks, they cooperate together? Of course they do. There was many cases when they've been fined and they didn't have a problem to pay the penalty for the market manipulations. There was a lot of cases. Just put it to the Google. There was JP Morgan, all these Lehman Brothers, all these banks, they've been doing Deutsche Bank, all these banks was doing the forex market manipulations. But so now I will stop this blah blah blah. You can find all of this on the Google. I'm not gonna teach you anything. This is as well, and I'm not any teacher. I'm just doing these videos because I'm doing my research, and maybe there's gonna be someone who is interested in it and maybe can help me or not. So let's see. So what I want to speak about is this community outlook. It's on the MYFXBOOK and on this webpage. And the thing is that actually all these accounts which are connected to the MYFXBOOK and they have reporting in the less than 30 minutes, they are somehow put it into this outlook, which is showing the market sentiment of the retail traders mostly, because this is not the banks. And the thing is that, as I said, if we want to trade with the banks, if we want to be on the right side as the banks are, we want to trade against the retail traders. So basically, we never know what the banks are doing. But if we know what the retail traders are doing, then we can trade against them, and our probability of the winning is much higher. So I want to show you something that I was looking for a while right now, and I'm slowly getting some data, and it's very interesting. So basically, as I said, we have this community outlook, and we can see, for example, this one is interesting, Euro Kiwi. You can see there is a 94% traders on the short and 5% on the long side. But the question is where they have this average position. Here we can see the average position short, average position longs, yes. So as I said, there is a 94% of the traders on the short side, but look where is their average position. They are like minus 482 pips shorts losing, yes. But there are some people who are already in the longs, 5%, and they are 58 pips in the profit. But the thing is, the banks, they will not want to win any side. They will do it that both sides will lose. So basically what you can do, you must somehow, let's say, synchronize yourself with this, what is happening here, and I'm slowly doing it and I'm already getting pretty good data. So let's, for example, let's look into my email, because I set up the alarms and I'm receiving the notifications about this email. So let's start with this one. For example, this cut franc, I had the notification to receive when the shorts will rise more than 20%, yes, and the longs, because I find out that the banks, they will mostly reverse the price when a lot of people start to be on that side too. Let's look at it this way. So basically we can see that the market was dropping from the top, from the here. The market, let me put the pen, wait a second, I just open the pen for us so I can draw with it. Okay, so the market was dropping from here, and we can see on that community outlook, I will put it here on the side like this, let's say. Where is that? Okay, so let's look at it. Where is it? Cut franc. Okay, so we can see that the market was dropping, and here is the average price, average entry long, this green line, and this red one is average entry short. So what actually happened? This retail traders' behavior, they saw this let's call it support, which was tested here, so they will start to buying, and they holding the longs from this level. So they basically are holding the longs from here, and what they do, when they see, you can see that how many people is in the longs, so market is dropping, then it comes here to the support, and here they start to shorting as well. So they start to shorts, but what is happening here? Maybe, I don't know actually what is happening behind the charts, because there are probably a lot of traders, they trade the martingale, so they buy, so they have average price here. So what they basically need, they need to move the price at least here to close it in the break even, or maybe somehow to get out with some small loss. So basically where these people who enter here, and they probably targeting, let's say, somewhere here, because this is the support, so they basically target here, and in every books they will tell you, put the stop loss to the below latest swing low, yes. So they have there is a stop losses, but you can see that some people started to shorting here, because we have already sellers, and it started. So it's what they basically do. A lot of people, they basically hedge, so they have a long here, they have a short here, and then they hoping. So, and what is the important right now for me? I can see that these people as well, but because we must think about the both sides. So these people who shorted somewhere, or let's say here, some here, who shorted this breakout, where they will be targeting? They will be targeting probably somewhere here, so they will be winning here. Now is the question, what the market makers will do. Do they want to win these people? Do they want them to win, or do they want to win these ones? I don't know. But what I can suspect, that they want both sides to lose. So basically, what I'm expecting from this, I set this alarm to give me the notification when this will change. The shorters will be changing more than 20%. Now it's 19%. Yesterday it was 20%. So I find out that when is there around 20% of the people on the short side, they will go take their stop losses, and they will basically have the stop losses somewhere around here. Because if we look to the 4 hours chart, there will be some swing, yes. So here is the average shorting price, and here will be stop losses. So what they basically can do, the market makers, they let's look at it this way again. So here the breakout traders, they went short. They have stop losses here. These people, they are in the longs. They're still holding these positions. I don't know why, but they still in these positions. So what basically can happen to make both sides winning? If they go deeper, I think right now is what is happening right now on the smaller time frames. You can see they go deeper, and these people who are in these longs, they have very, it's painful. It's so painful. And every drop lower, they closing these positions. And when they closing these positions, so then this outlook is changing, you know. And I find out that when is it around the 20%, that could means that there is enough people already on the shorts, which means that the liquidity as well here. So what I suspect that they can move the market here very easily, and they will want to do it to take these stop losses. I'm not sure if it will happen or not, but I will be watching it very closely, because I find out that this is happening very often. So this is for the cut franc. So let's look to the another one. Which one I prepared was the Aussie cat. Give me a second. So like this. So let's look at this. So Aussie cat, we have let's put Aussie cat. We had over 80% longs, more than 80% longs, because I received now I have received the email. I had it in the email and I had it there. Well, this is that. Yes, so you look, where was it? It was today, this morning. I received that we have percentage above 20%, above 21% to the shorts. So the people are shorting here. And these people who are shorting here, it's just around this price, you know. And the thing is that when I received this message this morning, that means that they are entering the shorts right now, and it's already over the 20%. So maybe these people who was winning, maybe some close the shorts here, maybe some of them are entering right now. And again, I can see that we have these people in the longs who are already losing, so they don't have to care about them too much, you know, because the average position is here. Till they don't move the market here, they will not be winning. And on the other side, we have these shorters here, and basically stop losses will be somewhere around, somewhere around here. Here will be the stop losses. So I can expect the market to move somewhere here, where this side will be losing and this side will be still losing, you know. So let's see. As I said, this is my market research, what I'm doing, and I will be watching it closely, and I will make then a next video where I will comment it, or I will comment it in my Telegram channel, which you can join in these links below the description. Next one is Euro-Aussie. Euro-Aussie, very similar situation. Look, this was very expected trade, and I was commenting it. A lot of people, you know, in this time, you know, we had this trend line, you know, we saw, or actually basically the trend line was like this, you know. And then a lot of people saw it's breaking, then retesting, you know, and everyone was expecting it to drop like this. And I was watching this market outlook, and I was like, no, it's not enough, you know. And exactly these people who shorted here, you know, where is the stop losses are exactly around here, you know, and the big ones, they put the stop losses here. Or maybe these longs, they are already hedging the positions, you know, maybe they expect. Okay, there is of course the players who can do it, but it's not gonna be easy to hedge, you know, hold the hedge and then close it. It's very difficult. The hedging is you must have very good mindset. You have to be patient, and it's not easy. But some people can do it. Anyway, back into this. So these people who are in the shorts, let's look at them. Let's look at Euro-Z. Euro-Z. So these people who are in these shorts around here, and they've been here, and there was I saw when the market is going up, these shorts are even still growing. They're still growing because these martingale robots, they're still adding more shorts, you know. So they're basically on the shorts like here. But what happened to me? I have received this email this morning that the longs are getting more than 10%. You know, so these people, more than 10% of these was in the longs here. What I expect, I'm still waiting for more than 10%. What is now? It's 12%. You see, so it's growing. It's amazing. I don't understand why all these people, if in all the books they teaching sell high, buy low, why they buying high and selling, you know. But the thing is that, okay, I'm saying it now right now, but it's definitely not easy. So the thing is, we have the longs here in this average price, and we have the shorts here. So what the market makers want, they want these people to lose, and they don't want to let these win. So they want to lose both of the sides. Basically, what I can suspect right now is that on this high, this pin bar was the taking out of the stop losses of these people, because there was the stop losses. The clever traders who was wrong, they just get out here, you know, with some loss, like it should be 1% per trade. Those who was still believing, there's a lot of people is doing it, they maybe was believing that market will reverse here, but they creating pain here. So what basically they can do right now, they might take out these long traders by the moving market here, and then they can move it, you know, higher again. Because why? Because when the market starts moving down, these people are still in the short, they're still losing. But when the other people will see that it's breaking, they will start to shorting again. So there will be more shorters when they start to move down, because the retail traders, they following the market, and then they move up again. So basically, I don't think this market will drop like this, but it can happen like, you know, something like down, you know, we will see. So as I said, this is just my expectation that they will come down to take out these stop losses of these long traders here. Okay, the next one which I was looking for is the Aussie, and we can see that here is you know, basically we can see that here was the support, this classic support break, you know, they went down, they took stop losses out, you know, and now again they breaking it and they keeping the price low. So right now these people are in the trap, where the market will move now, I don't know, but what we can see here, let's look to pound Aussie, and let's examine it. You see there is a lot of people people getting to the longs, but still people in the shorts. However, if I look into my email and we will look for the pound Aussie, long percentage about the 15%. Okay, yes, so the thing is that it was much lower, so there is a lot of people getting into the longs. I believe right now, if I look into this, it looks very nicely because these people are getting into the longs. They will have a stop losses maybe somewhere here because they still believe the market will go up, and these people are in the shorts, and here is the nice demand area. So what could happen is going down, taking out these stop losses, you know, then the new shorters come back into the game, they will take them out again, you know, and then they will drop price lower. These people, even more shorters will come, you know, because they will see, okay, market is dropping, you know, break of the trend line on the small time frame, then continue down, and they will come right below, right into this, let me do it with this color, right into this demand zone. Where is this average of the shorts, people? They will be happy that it's there, and then they will move it higher because they remove this supply zone, so they have the doors open and they have a nice area here prepared to go long even higher. So basically these bulls will lose, and these ones they will not give a chance to get out from the position, so everyone will lose. And when the market is going lower, these shorters take them out and down. This is really good, amazing business what the banks are doing. They really know how to do it. Next one is a Kiwi Cat. Kiwi Cat is now in these, like, let's say no man land, because we have a supply here, we have a demand here. And right now what is happening here, the market makers are, you know, doing this, and they supporting the price above this level, above this one. What I have found out already, but this is like very simple, very this situation is very common, that the market comes, you know, somewhere in the nowhere, and they start, you know, slowly breaking the trend line, you know, so everyone see this trend line break. But this candle, this break it's nothing. The trend line break, it has to be, you know, the proper candle. It has to be something like you know, something like this, you know, when we have this trend line, when we have this trend line, we need to see something like this, you know, proper candle, these two candles, this is like proper, really, you know, I mean, this is the trend change, you know, and the volume, with the volume, this is like, I mean, this is something. But if you look here, this is nothing. This is just, you know, it's like a less than 50% body candle, so this is just some, you know, and this is basically the trap. And what is happening here, this trap, so they start to, you know, doing the accumulation, blah blah blah, retest, boom. So some people they took longs here, you know, some took longs here, they are now in the trap, you know. Then these ones, you know, the more clever ones, they saw the retest, we can see the pin bars, boom, moving higher, but there's no momentum. So what can basically could happen now very easily, they will drop lower. And what can happen then? All these people who are in the longs from here, and I don't speak about this, if you are from the longs from here, who was trading the bounce of this. All these people who are from longs from here, they will get stop losses here below these. These shorters, it's a question if they will be still in the positions, but maybe they will give them the chance, they will move it lower, and then they will move they will attract more breakout traders, more sellers into this game. And then, you know, so when more people start to sell for this breakout, what then gonna happen? Then when more people is selling, then the average price of the sell is moving down, you know. And when the average price, when the banks, they attract the people to move the price lower down, look how they set the trap. In here, in this demand zone, they start to move higher for these stop losses here. And when they move into this supply, which is below this average price. So they will not give a chance to these bulls get out from the positions. So, and they will move price lower again. They will not have a chance, these people, to get out from the trap, and these ones will be more in the trap. So this is possibly what could happen here. And why do I think that the market will reverse from here? Because look at this zone. This is the zone from where the big movement started, and it was break of this trend line. And as well, if we look into the weekly, we can see it. It's a big movement with the volume. When is there volume, there is a lot of orders. You can see it on the monthly as well. Look at this on the monthly. This is just where we are. So the early people in the longs right now, they will probably get this stop loss here and move higher. So let's see if this happens. This is what I wanted to tell you, what I'm doing this research. So if you're interested in it, if it looks interesting for you, join to my Telegram channel. I post more about it in the channel, and I will be more than happy that if someone will join me and helps me with this, because we are on the same boat, same way on the retail traders, and I still believe, and I'm actually already proved that it's possible to do the living from the trading. But I'm still looking for something more sophisticated, something more better, something new. Let's see. So okay, so this is it, and happy trading, my friends. Friday is NFP, maybe is what I'm expecting. Actually, it's something similar is on the dollar. If we look to the dollar here on the 4 hours chart, yeah, what we can see as well. Okay, I'll put it on the 4 hours chart. So what do I see here is that we saw that the dollar index was dropping, then we have this break. Look, this is this trend line break, yeah, as was on this another cat. It's nothing but this trend line break. This is the proper trend line break, what we want to see. Yeah, then the market was moving higher. They created new demand zone because they removed this supply zone, so they opened the door for the move higher. But again, the trick here is that the people, when they see this break of this, they go longs here, they put stop losses here, and the market makers are dropping back here. So they basically dropping back to my demand zone where I'm interested to go longs, which is actually doing the similar, the opposite on this euro, because the euro is overall downtrend. We are already here, and I was expecting to drop it down, and it's happening on the many other majors, and so just waiting to this to happen, and I think that they will exactly time this movement on the market, on the NFP on the Fridays. And we will see how they will move it, because I know that the banks are motherfuckers, and they will definitely move it the opposite way than the market that I will release. So let's see. Okay, this is it, and thank you and bye bye.